Top 10 pieces of investment advice from Warren Buffett. Number 1. Invest in what you know and nothing more. Warren Buffett said that never put money into a company that you don't understand. When I come across such a company, I just say pass. Number 2. Never compromise on business quality. Warren Buffett mentioned that it's far better to buy a great firm for a fair price than a good company for a wonderful price. Time is the friend of the wonderful business, the enemy of the mediocre. Number 3. When you buy a stock, plan to hold it forever. Warren Buffett explained that if you're not planning on holding a stock for 10 years, don't even consider holding it for 10 minutes. Our favorite holding period is forever. The stock market is structured to move money from active to passive investors. Number 4. Diversification can be dangerous. Warren Buffett expressed that opportunities come infrequently. When it rains gold, put out the buck, not the thimble. He added that diversification is a safeguard against ignorance. For those who know what they're doing, it makes little sense. Number 5. Most news is noise, not news. Warren Buffett's analysis was that stockholders, on the other hand, are too often led astray by their fellow shareholders' unpredictable and often irrational behavior. Because there is so much talk about markets, the economy, interest rates, stock price, behavior, and so on. Some investors believe it is vital to listen to experts, and worse, to act on their advice. Number 6. Investing isn't rocket science, but there is no easy button. Warren Buffett suggested that history-based models should be viewed with caution by investors. These models, which are built by a nerdy-sounding clergy, tend to look impressive. Investors frequently overlook the model's assumptions. Be wary of formula-carrying geeks. Number 7. Know the difference between price and value. Warren Buffett recalled that even though a terrible recession was clearly looming during the enormous financial panic that occurred late in 2008, I never considered selling my farm or New York real estate. And it would have been silly of me to consider selling a stable firm with a good long-term potential if I had controlled 100% of it. So why would I sell my stocks, which were minor stakes in fantastic companies? True, any one of them could disappoint at some point, but as a collective, they were bound to succeed. Number 8. The best moves are usually boring. Warren Buffett said that we make no attempt to identify the few winners who will emerge from a sea of untested businesses. We're not smart enough for it, and we're well aware of it. He also cautioned against investing in activities that elicit praise. Tremendous actions are generally met with yawns. Number 9. Low-cost index funds are sensible for most investors. Warren Buffett shared that his recommendation to the trustee is straightforward. Invest 10% of your money in short-term government bonds and 90% in a low-cost S&P 500 index fund. I believe the trust's long-term outcomes will outperform those of most high-fee managers, whether they are pension funds, organizations, or people. Number 10. Only listen to those you know and trust. Warren Buffett explained that no matter how many assurances management makes that the value-diluting action taken was one-of-a-kind event, shareholders will suffer for a long time as a result of the price or value ratio provided their stock. That's all for today's video. Let me know your thoughts in the comment section. Like, share, and subscribe.